Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our OTCQB Venture Conference. Our first live presentation of the day is from SURG Copper. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Leif Nilsson, Chief Executive Officer, Director of SURG Copper, which trades on the OTCQB venture market under the symbol SRGXF and on the TSXV under the symbol SURG. Welcome, Leif.
Thanks, Greg. It's a pleasure to be here. I guess I'll take it away. So thanks everyone in the audience for joining. This will be a fairly abridged version of our presentation, but as Greg mentioned, if you want to follow up to go a bit more in depth, feel free to reach out. So I will be making some forward-looking statements throughout the presentation, and please refer to our fulsome disclosure with regards to technical disclosures with full disclaimers in our technical reports and press releases as specified. So who are we and what are we about? So SURG Copper is a development stage copper company. We're based in Canada, both from our primary listing perspective, but also the main projects that we are advancing. I'll get into the details in a minute here, but the type of deposit that we are advancing is called a porphyry copper deposit. These are the bread and butter of the world's copper supply. Something like 2/3 of global copper production comes from this style of deposits, and we are located in a very large established mining area within British Columbia. So the metal exposures that we have in the main in the deposits that we are advancing are predominantly copper, but also some significant byproducts of molybdenum and precious metals. In my opinion, these are all metals that have, very favorable exposures to end markets with very solid long-term demand growth and supply dynamics. British Columbia is, it goes without saying, a world-class jurisdiction in with regards to mining. There's world-class infrastructure, human capital, the geology is fantastic, and as a result, there is a huge list of major mining companies that are today operating there and continuing to invest or grow their investments in the province. So it's a wonderful place in the global context to be advancing a copper project. We do make the distinction here in the first bullet here that within the BC context, we are not in the Golden Triangle, which is an emerging area within BC that has exciting geology, exciting exploration opportunities, but is quite infrastructure constrained. So in the context of developing a copper mine, proximity to infrastructure is all important. We're located in central BC, as I said, in an established mining area. So there is excellent access to the types of infrastructure that you need, whether it's electrical power, roads, water infrastructure, things like this. So it's a very premium location globally, but also in the context of BC, where we're located in a very good place there. A couple slides I'll show you here relate really to the investor perspective. We believe that we're quite an advanced company in terms of where our project is. We have very strong strategic support from a large cap mining company, which I'll speak to. And yet our equity trades at a fairly material discount to a lot of close comparable peers. So I think the equity today represents a very clear value proposition for investors. A bit more kind of strategic context on who we are and sort of why it matters in the big scheme of things. So in Canada today, there is primary copper production coming from a handful of these porphyry copper type mines located in British Columbia. Those are the sort of copper colored bars on the left-hand side of this page. There is a bit more byproduct copper coming out of places like the Sudbury Basin, which is a big nickel producing region in Canada. But nonetheless, if our flagship asset, which I'll begin speaking about in a moment. It's called the SURG project. If that were producing today on the metrics that we outlined in the maiden economic assessment from a couple years ago, it would constitute the second largest copper mine in Canada. So it's a very substantial scale asset. One of the real notable differentiators about it, though, is the overall size of the molybdenum byproduct. So a lot of these copper porphyry deposits, no matter where in the world they are, they will have byproducts of those three metals I mentioned: gold, silver, and molybdenum. We have all three of those as byproducts, but the molybdenum byproduct is quite large in the sort of global, compared to global peers. If you stack that up against other moly producers in Canada, it would be by far the largest relative to Highland Valley and Gibraltar, almost by a factor of 10. And it would compare favorably to a handful of primary moly producers out there. So major companies like Freeport-McMoRan, they operate a couple primary moly mines where molybdenum is the only metal that's being output. And so Climax and Henderson, shown here on the very far right, would be two of those. So our byproduct molybdenum production would rank sort of in line with some of those, benchmark primary moly producers. So a simple takeaway, this would be, by a factor of 10, the largest moly mine in Canada, but would also have a very significant copper business underpinning it. So both of these are critical metals as defined in Canada. They're well positioned to I think garner a lot of support from various policy initiatives, both within Canada and the province of BC specifically. So getting into the specifics of where we are. So in central BC, this is our land position here. It's a very large contiguous land mineral tenure position, which is important in this business. It's about 145,000 hectares of contiguous tenure. It is a established mining district, as I mentioned. There is a care and maintenance status copper mine located right in the middle of the area, right here, called the Huckleberry Mine. That's owned by a third party. Its future is, a bit uncertain as to whether or when it will be brought back into production. But SURG is busy sort of advancing a lot of the, big exploration and development opportunities in the district as a whole. And our focus for the last several years has been on this SURG deposit here in the top left of this map. The big picture, though, is we're in an area of British Columbia that is infrastructure rich. We are, within a 100-kilometer radius of one of the newest large-scale gold mines in Canada, called the Blackwater Mine. We're just south of the Coastal GasLink natural gas pipeline and the LNG Canada terminal. Collectively, that was a $50 billion investment made in this region in the last few years, which is one of the largest private sector investments in Canadian history. We're also adjacent to Rio Tinto's Kitimat aluminum smelter and the associated Kemano hydropower station. So there's a lot of heavy industry in this area, a lot of forestry activity, a lot of sort of surface disturbances, and local communities in this region are very consistently employed or at full employment in a lot of these sorts of industries. So it has the right building blocks for a large-scale copper development opportunity. One of the key catalysts for our company and for the SURG project in recent years was the publication of a first ever preliminary economic assessment. So this was done in 2023. This study had a mine plan associated with it that outlined the production volumes that you can see on this page. So it's about a 30-year mine life, producing about 126 million pounds per year of copper, which constitutes about 64% of the revenue. So definitely a primary copper project. The next largest credit is the molybdenum, about 13 million pounds per year, or 26% of the revenue. And then the balance coming from silver and gold, making up about 12% of the revenue. So all together constitutes, in units of copper equivalent, around 200 million pounds per year. And over that 30 years, about 6 billion pounds equivalent. The financial numbers that were associated with that preliminary economic assessment, it resulted in an after-tax net present value at an 8% discount rate of $2.1 billion Canadian, and similarly an after-tax IRR of 20%. All of this was based on metal prices of, excuse me, $4 copper, $15 molybdenum, $23 silver, and $1,800 gold. All of those prices are now sort of well below sort of spot prices and where prices have been trending in recent years. So as we approach the next major milestone for this project, which is the pre-feasibility study, we will see a lot of those numbers be updated in addition to a lot of the technical facets of the project. That being said, if you look at the economic sensitivity to metal prices from the PEA itself, which is what's shown here, you can see that we would definitely be in the lower right-hand quadrant of both of these tables based on where prevailing copper and molybdenum prices have been in recent years. So copper prices, the right benchmark to be using here would be the LME sort of global concentrate benchmarks, which are sort of in the 425 to 450 range pretty consistently over the last couple of years. And then molybdenum has been very persistently between $20 and $30 per pound over the last few years. So that would place both of these numbers somewhere comfortably in the lower right-hand quadrant based on the other assumptions that were contained in that preliminary economic assessment. This is a snapshot of what the Berg project looks like, and it really has a few sort of geometrical and just sort of location-based attributes to it that give it, you know, very strong appeal relative to a lot of other greenfield development copper projects globally. Number one is its location in the province that I've spoken to a few times here. So it's close to the types of infrastructure that you need for these types of mines, whether that's water or hydroelectricity. It's a single deposit and therefore would be developed as a single open pit. That dramatically reduces the complexity of a project like this relative to alternatives which might have a similar production profile to what I've just shown you, but would be derived from sequencing, you know, multiple different open pits or maybe even a, you know, bulk underground mining operation, both of which adds, as I said, adds a lot to geotechnical complexity, resource complexity, risk across the spectrum. It's a very low strip ratio project. The strip ratio in the preliminary economic assessment was 1.1 to 1. We expect to see that number decline over time as we continue to infill drill some of the lower grade halo and waste material regions of the deposit. But already that 1.1 to 1 is globally competitive for copper porphyry open pit projects around the world. And it has a very nice consistency of grade throughout the deposit. So there isn't a whole bunch of different, you know, patches and pockets that are comprising the resource. It's quite homogeneous. That being said, there is a nice enrichment of grades, copper grade in particular, in the top 100 meters from a weathering phenomenon referred to as supergene enrichment. So there's a chalcocite blanket in the top 100 meters, so you get the best grades at the front end of the mine life. All else equal, that's quite a lot better. And then because of the geometry of the deposit and where it's situated in this, as you can see in this image here, there will be a lot of downhill or lateral haulage over the life of mine, including haulage of crushed material from the crusher over to the concentrator and mill. All of those things, you know, lend themselves to a lot of efficiencies in the very, you know, high energy and intensity activity of material movement. So you should expect to see, you know, very competitive mining costs here at this project as a result of that. And then on the processing side, really nothing we're doing here is novel. It's all off the shelf sulfide flotation. So very simple compared to a lot of our project competitors out there. This is a schematic look at the project layout. So the photo I was just showing would be looking north across the deposit area here. The crusher would be located just on the west end of the pit, and then there's an overland electrically powered conveyor that would bring crushed material slightly lower in elevation to the mill, which itself would be located next to the tailings impoundment facility. And the ancillary or peripheral infrastructure needed for this project is relatively minor compared to, again, a lot of greenfields copper development projects globally. The amount of road that we would need to build to connect this into, major industrial quality roads is only about 15 or 16 kilometers. And similarly, on the electrical power side, there are multiple opportunities to tie into the BC hydro grid within a 20 to 50 kilometer radius from here. So this isn't the type of project that needs significant amounts of money invested by governments or third parties to unlock the infrastructure side of things outside of the immediate footprint of site. Just a few benchmarking slides here. So from a Canadian context, I talked about most of the copper production in Canada comes from these porphyry copper mines in Western Canada. This is a fairly comprehensive list of those mineral inventories or resource endowments at these types of deposits in Western Canada. The dark colored ones are the operating mines. So Highland Valley here, right in the middle, operated by Teck, would be Canada's largest copper mine. The other lighter colored ones are greenfield development projects, some of which are located in some of those infrastructure remote or infrastructure constrained areas I referred to, such as the Golden Triangle or Yukon territories. The key takeaway here is the mineral inventory that SURG owns today is one of the largest in Canada, and if you adjust for or correct for location constraints, infrastructure, things like that, it is one of the largest in Canada that is located in a relatively low risk and sensible location from that perspective. In terms of some key peer comparisons, I'm showing here a few different companies that are sensible comparisons to make against SURG. So the column just to the right of us is another company that's located in British Columbia. The one further to the right is a company developing a project in the Yukon. And then on the far right is a company that's developing a similar project in Ecuador. These are some of the key key metrics that you would compare and contrast between these types of companies. Total contained metal, total grade of the resources. You can see that SURG compares very favorably against this peer group. Similarly, recent economic studies, whether that's a preliminary economic assessment, a feasibility study, what have you. Again, very similar numbers across the board. The real difference is in the market value. So today, SURG trades at around a $50 million market cap, slightly less than that in enterprise value, and that compares against some of these peers with a difference of really 10 to 30 times our market value. So I think the very simple takeaway here is we are a deep value opportunity in terms of the assets that we own and the stage of advancement they are at compared to many of our peers out there. Just quickly on some of the work that we have completed in the last year or so. Basically, since publication of that preliminary economic assessment I spoke to over the last couple of years, we've been steadily advancing the project toward pre-feasibility study. We anticipate the completion of that in early 2026, and a lot of the work that we've been doing in recent years and catalysts that we've been releasing to the market have been real technical achievements in service of that. So this image here shows some of the drilling that was completed last year. It's a mix of resource definition drilling, the green collar locations, and geotechnical drilling, which are the red collar locations pointing outward into the periphery of the deposit. We achieved some fantastic results on the resource drilling. One number to highlight here would be hole 255 from last year that intersected 320 meters of 0.55% copper equivalent with a nice elevated interval in that supergene enrichment zone near surface that I talked about. hitting 88 meters of 1.05% copper equivalent. So gives you a good demonstration of what the Berg deposit can deliver. I'll speak to the results of the geotechnical holes in a moment here. Another very major catalyst that we released to the market about a month ago was the results from about a year-long metallurgical test work program that really achieved a lot of positive results to advance the metallurgical understanding of the Berg deposit and the sort of data that will underpin the pre-feasibility flow sheet. This was about a year-long process, as I mentioned, using a couple tons of test material. The key takeaways here are that we achieved locked cycle testing, resulting in recoveries of copper and molybdenum to a bulk concentrate in the 90% range, and then furthermore, very efficient separation of the molybdenum into its own concentrate at, again, sort of mid 90% recoveries relative to that bulk con. So these are taken together, these are numbers that represent a material increase versus the recovery assumptions we used in our preliminary economic assessment, in the range of maybe 5 to 15 percentage point changes versus the preliminary economic assessment. So the tables on the right are sensitivity tables showing impacts to the PEA economics from stepwise increases in copper and molybdenum recoveries. So again, putting aside changes in metal prices, from this result alone, we are anticipating very strong improvements in some of the economic assumptions that are going to go into the forthcoming pre-feasibility study as a result of this big achievement. On the geotechnical side, not quite as dramatic, but also similar direction. This was a very successful program where we, through the geotechnical investigations into the pit area, we've been able to deliver slope design criteria for the forthcoming PEA mine study that will very likely result in potentially steeper pit walls overall, but in any event, a more efficient development of the pit as we move through different phases. So that will allow us to design phases in the development of this pit that will very likely result in a more favorable or more efficient delivery of higher grade material early on in the mine plan. So just in summary and conclusion, what have we been doing over the last while? It's all been technical work programs to progress the Berg project from the preliminary economic assessment stage to the PFS stage, targeting Q1 2026 for delivery of that. So a lot of those programs last year and currently going on right now, they've involved the metallurgy program I summarized, the geotech program in the pit. We have more geotech happening this summer focused on the infrastructure area. We've got a geochem program going on this year to target, to gain some data and analysis for ARD and acid rock drainage and metal leaching characterization. We are progressing the environmental baseline work and doing some additional resource drilling. So lots of different building blocks that will culminate in the delivery of a pre-feasibility study in the coming 6 to 9 months. We had a big achievement last year around the acquisition of some important mineral tenure to the west of the project. We acquired the mineral tenure underlying the infrastructure area. This is a pretty significant de-risking step for the project, and a lot of the work going on in this year's field program will be focused on gaining new technical data and understanding of geotechnical, environmental footprint, things like that in that new area. As in parallel with all this, we are progressing a lot of the desktop trade-off studies that will form part of the PFS. And also during the summer field season that we've kicked off in recent weeks, we will be advancing some exploration targets throughout the district as well. I'm just going to conclude with some information on the cap structure. It's a very simple cap structure. It's all equity. There's no warrants outstanding. As I said, the market cap is around 50 million Canadian. In recent weeks, we have launched a financing. It was a $10.4 million Canadian financing. We closed on the public offering portion of that for 5.9 million about a week ago. The remainder of that is a strategic investment being made by our major shareholder, ARM, African Rainbow Minerals. Today they own, or they did own 15% prior to this financing. They've committed as part of this financing to increase their ownership to 19.9%. That tranche of the financing is anticipated to close in the next 3 to 4 weeks. So we're advancing that. At the conclusion of that, we will have raised 10.4 million in total, and ARM will have increased their ownership position to 19.9%. I'm going to stop there. Give a moment or two to see if there's any questions from the audience. Otherwise, I will hand it back over to the moderator to close things out.